G'day everyone, welcome back to Pete's Investing this week for the Bluechip update. We're still waiting on some closes to happen, nothing happening at the moment. We're still in a bit of a consolidation mode with some declines for our shares. But first off, don't forget to subscribe and hit on the like button for getting future updates. And this is just showing the playlists for the indices which we review each week, but also in the share prices, which is this week's video. And likewise the strategies we use. Please refer to those to get an understanding of the simple trading strategy, the average down process, including some money management ideas. Okay, so let's get stuck into it. First off with the CBA. As you can see here, it opened up with a bit of a rise early in the week, and it closed out with a slight profit after being held for a number of weeks. Probably about 8 or 9 weeks opening up back there. So it closed out there with a profit or a return on 1,001. You can see there on that $1,001 from our $100,000 baseline. It opened up at 998. So very minimal return. But our strategy is always to close only if it's in the positive, whether it's a few dollars or whether it's 1,000. We're going to close with a positive return. We don't want to close at any negative returns. Although we didn't add to the positions because of the consolidation it applied here. Then it recovered back again later in the week on Thursday with an opening there, and it's still in a open position there with you can see there 22 shares for the CBA. Next, we look at BHP. Again, this has been held for a number of weeks, as you can see back here in early March. There's a bit of decline in the market, in the share price, and it's been consolidating with a slight rise ever since late March, but we're still down from our initial opening. This week, it opened up high from our last week's close. It dropped off, gap down there, and it's recovered back there and consolidating back to where it opened up in the start of the week. So no dramatic changes there for BHP. Then we look at Volkswagen. Again, this has been held for a number of weeks. It's been a consolidation for a number of weeks, about 3 or 4 weeks there. Then it's been dropping off slightly in the last couple of weeks with making new lows this week. It's hit a slight support line there, so we want to actually make it. We want to actually see it rise and break those resistance lines there to see any further uptake in terms of returns. Next is Telefonica. Very similar to Volkswagen. It opened back a few weeks there. Gradual decline in the share price. It's actually leveled off and it's hit this support line here this week, and it's sort of mulling around that area there. Nothing really dramatic happening. Let's see if it's going to break and bounce off past that resistance line or break down below that support line. We'll keep an eye on that. Next we'll look at JPMorgan. This has been going sideways for most of the last few weeks since the open back in mid-March. As you can see there, it's been dropping off, going upwards and downwards, and been going sideways, so consolidating all along. Hit new lows here in this little support line, but again, let's see what it does. So as per the opening, as we mentioned on the opening slide, we're still waiting on a lot of these to break out of this consolidation. It's been doing that for a number of weeks now for all of these shares. Johnson & Johnson. That had a hiccup early last week after there was a drop in the share price due to the blood clotting, but it's recovered back past that gapping of last week, that gap, and it actually surged up past that this week. So that's a positive sign. That small hiccup didn't really bother it, although in the longer term it is still consolidating sideways since the opening. We want to see it break above that resistance line and continue up to this major resistance up here at $170 odd worth of price. Lastly, let's look at Caterpillar. Again, similar to all the other charts, consolidation, not much movement. It opened up early last week and it's been going sideways since. It dropped off a bit, new lows there, but again it's recovered and bouncing off this support line. We need to break above that resistance to see further uptake on further gains in the share price. Let's look at our summary of returns and what it's been doing over the 18 months. And again, we're looking at, this is an average of 17 months of charts. So if you look at the Caterpillar price as an example, it goes back, each of these charts go back about 17, 18 months. Again, this is a snapshot. So every week we do this, it creates a snapshot based on the latest week, and we lose a week back here. So it's always a snapshot scenario. As you can see there, you can see the results for each of these. And again, these are all in various denominations, in Australian dollars for the Australian shares, Euro for the European shares, and US dollars for the these three US shares. So we'll call that an index in dollars or euro if you like, but that's roughly, let's call it dollars for the better argument. And overall it's returned 48% of our total investment into that. So we're entering at each of these, for each of these charts, we're entering in $2,000 lots of shares. So every time it enters, back here for example, we enter $2,000 worth of shares there. It closed out, enter another $2,000 shares, etc. Here where it's added to the positions, it entered $2,000 worth of shares there. It added another $2,000 worth of shares there. So there, for example, would have been, let's move the cursor there, you can see there. No, you can't see it. But it's added $2,000 worth of shares there. It held it there for a while, added another $2,000 there. So there, total, we've got $6,000 of shares held, in this case for Caterpillar, back in that period. And all along these months, it's been holding only one lot of $2,000 shares at each of these open and closes. And we're currently sitting at a $2,000 lot of shares in this last 2 weeks. So going back again to our summary of results, the buy and sell strategy versus the buy and hold strategy. And again, just emphasize for those new to the video, the top chart shows profitability for buying and selling, and this bottom profitability chart shows we bought the same number of shares back here. That's what this block shows here. So we bought the same number of shares back here at each of these profitability levels, except here we're not selling it, we're just holding it. And you can see here the buy and hold for Caterpillar is outperforming the buy and hold for, the buy and sell strategy for Caterpillar. The reason for that is whenever a chart goes sideways or dips up and down as it has in the halfway point of this particular chart, the buy and sell strategy always performs the buy and hold strategy, as you can see there. Up to this point of middle of from late October to mid-June, the buy and sell strategy for Caterpillar has returned $685, whereas the buy and hold strategy is about break even. But since the price chart has gone in that direction, continuously up, that will always outperform the buy and sell strategy because we're holding the position, whereas the buy and sell strategy is closing out positions and we're losing out on any minor, as you can see there, for example, it's closed there and it's re-entered there. It's closed there, re-entered there, closed there, and re-entered. It's losing that small profitability of gain according to our strategy whenever it does that. But for those that want to buy and hold, that's not a bad return. But overall, the buy and sell strategy outperforms the buy and hold strategy. In most cases, as we said, Caterpillar was probably an outlier, and likewise Johnson & Johnson. The others are close in terms of returns, but overall price charts generally go sideways or consolidate, and that's where the buy and sell strategy outperforms the buy and hold strategy. So overall, it's returned, the buy and sell strategy returned 67.64 for the 18 months, or 48.95 for the buy and hold. But again, we're not selling those, so there's no actual return. The other benefit of doing it this way is we're getting some sort of returns or monthly income, if you like. And this monthly revenue is looking at an average of 17 months. So it's basically that divided by 17. It's $406 for the 7 shares we're trading on average per month. Okay, don't forget to hit the subscribe button and the like button for future updates, and we'll speak to you guys in next week's review, and hopefully we get a few more positive returns with our shares. Speak to you next week.